Hi, welcome to the Market Alert for Tuesday, the 26th of January 2015. Starting off in yesterday's chart, we had a buy signal just after the open there in the official session. The market in the pre-market session gave quite a few good signals. Of course, we don't trade after 10 o'clock until we get around an hour before the official time there. So you can see a few trades there, 100-point range in the pre-market session. Quiet period for the pre-market session, and then the market starts to get active again with the 60-70 point range before the official open. And what's interesting is that there's more of a range there than there was when the market actually opened officially at 2:30. So the market traded down. We see a buy signal there, the market trading up to the psychological level there. Let me just put the data line on there. We can see that's at 16,050, and then we had a sell signal. I actually lost on this one because the market turned around a bit lively here. We had the market trading up to 20 points, and then by the time I looked at the chart, it was already on the way down, and we had a sell signal, so took a 17-point loss as this one turned around and came back, but then picked up the 20 points as the market settled on the 16,000. And the reason for taking the profit at this point was because the market was waiting for Draghi to speak. So that made up the loss there. We've got a buy signal here. This is at 1700. The market trades up until we get to 1600 here. In this trade here, this trade produced 45 points, but the market was waiting for Draghi, so I didn't actually do on that one. Nothing to stop you from doing it. The market's going to be boosted by whatever the central bankers talk about at the moment, because they think they're going to save the whole of the collapse of the financial markets, and they're not going to do that. So 45 points up to this point, and then after in the evening session we had a sell signal here giving another 40 odd points. So having made up the loss here with the short, I didn't do this one, just being honest with you. It's easy to say, oh, I had 50 points out of here, but I didn't. I was sitting waiting for Draghi to speak. This one obviously not valid either, because it was during Draghi's speech to the European Union. And then in the evening session, after an hour after he'd spoken, or just after an hour, just before an hour, we had the sell signal, and then the market continuing on down lower for over 150 points, but just grabbing 40 odd points in this one trade here. And then that's where the market ended there. On the overnight, it's just switch charts, and we've got a situation where the market continued sideways. Then we've had a sell here. The market has been bought back for a quick profit to the upside, another sell, and now working its way lower as well. So in the daily chart, you can see we're on the way back down, and those August lows, as I keep going on about, they're going to be in sight shortly. And if we just rescale the chart so you can see this, you can see there the market starting to turn around and head back down. Let me just redo that. I was trying to just move this extension across there. We've also got this low here, which the market's at now, 15,809, and then we'll have this one in here as well now that can be taken out. If they're taken out, we're heading back down to those August lows, which you can see over here, and that's at 15,254. And this will be an interesting area. This is the area where the plunge protection team are likely to come in and do something with the market. And let's just have a look. Actually, I'm not too sure if we haven't got an FOMC meeting this week. Let's just have a look a bit further out. If it is, it's tomorrow evening. Let's just have a look at Wednesday. Yes, we've got an FOMC statement and Fed funds rate tomorrow evening, so it's highly unlikely that the market's going to get down to these sorts of levels within that time, because there is quite a distance down to this sort of level. So if we go down to, I'll just move this out to the right a bit, just get a ballpark figure, 582 points. Never say never, because on the 24th of August this bar is over 1,000 points. but 584, given the current conditions, would be difficult to achieve. But again, these are the things you have to look out for when you actually trade. You have to look at the background of the market, see what the potential is, and what could happen as well. But these are all of the areas of support you want to watch. If you're short, then you need to make note of these and just keep an eye on them, so that if they're taken out convincingly, you know the next downside target, because this is what the big boys will be looking at as well. On today's news, we've got Barmy Carney. He's speaking at 10:45. Take no notice of whatever he says, because everything else he said in the past has never come to fruition. Absolutely 100%. And then we've got CB Consumer Confidence at 3 p.m. Again, you notice they're starting to wheel out all of the central bankers to try and keep this Ponzi scheme alive that they've had for the last 8 years, where the markets have been pumped up on QE money. It's not gone into the economy. And we're seeing the global deflation now coming across from Asia, along with the Yellen stupidity of raising rates by 0.25% based upon one piece of information, and that was the strong labour market. It's not just me saying that as well. Have a look at Michael Pento's video from yesterday. And in fact, I'll actually place the link in the email for you so you can have a look. And he says exactly the same, except he's not as polite as I am about their ability to actually manage the economy. But I'm not going to go into that here today. Let's have a look at the implied volatility. 1930 for Monday. Tuesdays is 2106, because obviously the market dropped 150 points before the close, so just up slightly there. Quick look at the Far East to conclude. We've got the Dow, not the Dow, let's try the Shanghai, shall we? Shanghai's down 4.12 after pumping in billions into the market last week. Again, the market resuming that downside slide there, and it will continue to do so as well. 2000 is on the cards for this. I have no doubts about that whatsoever, because if you look at the 5-year chart, that's exactly where the market started before they had their bubble. And you can see there the bubble has certainly been pricked. It's lost 45% so far, and will continue to move back down to 2000 as well before the end of this year, no doubts. Right, that's it for today. I will see you in tomorrow's edition. As ever, thanks for watching, also for your support, and see you in the next one. Thanks for watching.